This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade FOREX Report with Scott Norse.
Good afternoon, traders, and welcome back. Scott Norse here with your FOREX Report for Monday, April 28th, 2008. We have a very busy week ahead of us, despite getting off to a slow start today. Traders are still digesting a big rebound in the U.S. dollar late last week and are likely hesitant to push it too high ahead of big event risk. Tomorrow's only releases April consumer confidence, and the real fun begins on Wednesday with three important reports. The first is ADP employment, which precedes the government's monthly non-farm payrolls. Just 15 minutes later that morning, we'll see the first reading of Q1 GDP for the United States. Economists expect the economy grew by only about 0.3% on an annualized basis. While this number is already relatively weak, the dollar will really feel the heat if we see a negative reading indicating the beginning of a recession. Finally, Wednesday afternoon is a highly anticipated Fed rate decision. The FOMC is expected to cut by 25 basis points, but signal to the market that it's done or near done cutting the overnight lending rate. Moving into Thursday, we'll see the latest PCE figures, which is the Fed's preferred measure of inflation. A big number here could actually help the dollar if the FOMC statement talks up inflation. We will wrap up the week with the government employment report Friday morning, which consists of the unemployment rate and non-farm payrolls. Technically speaking, we still see room for the dollar to gain this week. The problem is, all the aforementioned event risk is keeping investors from loading up. Weekly closing prices on pairs such as the euro-dollar last Friday left the door wide open to another rally in the greenback this week. The good news for dollar bulls in regard to this week's economic calendar is that the bar has been set very low. We're expecting another drop in the 20-year low consumer confidence, almost no growth in GDP, and another net loss in jobs to the tune of 75,000. If the actual numbers can't at least match these figures, it really doesn't matter how low the dollar is historically, it deserves to fall further. As Americans, we would love to see the recent bounce in the buck continue and are hoping for upside surprises across the board to fuel that move. As traders, we're expecting a lot of price action and more than willing to take the dollar long or short. Till tomorrow, have a wonderful night. Take care.